Hello and what is going on, lovely people of the internet? It is Hoot Money here with another video for you guys today. Today we're going to be going over Bionano Genomics, and guys, this one is an interesting one. And I'm just gonna give you this warning right now. I am not a doctor. I have no medical background. I only have a background in finance, 2 degrees in finance with a master's degree. I have no experience in the medical field, so forgive me if I get a few things wrong when explaining this type of stuff, but also I'm not a financial advisor, so yeah, please don't sue me. But anyways, this company is cool, this company is disruptive, and from what I've read, they're doing some great things in the genomics field. I did a pretty detailed analysis on this company to the best of my knowledge. I looked through everything. I looked through their 10K, their financial statements. I did a few random Google searches just to find all this information and compile it into one video. So this is pretty much going to be the only analysis you'll ever need of Bionano Genomics, and it's going to be a pretty long video, so make sure you stick around to the end to get all the detailed analysis. And I'm going to be doing a price prediction at the end of the video, so if you want to see where I think this price is going to go, that's where you'll be able to find it. That all being said, if you want to see more detailed analysis like this, make sure you subscribe to the channel and turn on post notification. And the number one thing you can do is like the video. If you like the video, this actually shows this type of content to other people who are looking to be educated in the field of finance. So if you guys can just scroll down real quick, turn that like button to a blue, and yeah, we're gonna be good for that. Let's get right into the video. So Bionano Genomics is a genomics company that has this product called Sapphire, which is a genomic device that is becoming the leader in cytogenomics due to its accuracy, speed, cost, and ease of use. Sapphire will help detect constitutional genetic diseases. A huge fraction of these diseases are currently testing as negative, so it's upwards of 50 to 70% of people, these patients, need proper diagnosis or they won't be able to be accurately treated. An example would be blood cancer. 200,000 new cases are diagnosed each year in the US, and most of the results turn up to be negative. So where Bionano Genomics steps in is their device Sapphire can detect large structural variations where their competitors can only detect small structural variations. So I'm going to throw an image on the screen right now to basically explain what exactly this process is. So on the left hand side of the image, you can see how the C cannot connect to the A. So this is what their competitors can already detect, and it's basically one base pair, which is a singular nucleotide polymorphism. They can get some data from this, but they cannot accurately diagnose all of these diseases from just this information alone. Sapphire can detect hundreds of base pairs to millions of base pairs, and they can find these large structural variations, which are translocation, deletion, insertion, repeat expansion, and inversion. All of these variations are not detected by their competitors, and it is leading to all of these diseases not being properly diagnosed. By being able to detect these large structural variations, they will be able to diagnose these diseases much early on than their competitors. Now, if you're lost and you don't completely understand how this is all working, that's okay, because we are going to be going over basically the financial side of things from now on. So no need to worry anymore about the scientific side, because we are going to be talking profits right now. So the market opportunity of Bionano Genomics is 2.6 to 3.8 billion dollars, given that their technology will be fully adopted and they will be able to sell 10,000 of these systems. Now, this number was determined by 2 different sources, which is cytogenetics and discovery research. So there's currently 2,500 cytogenetics labs worldwide. So if they are able to fully adopt this technology and each of these labs ends up getting one of these devices, then they will be extremely profitable with 0.5 billion to 0.6 billion in revenues, and then 0.2 to 0.4 billion in recurring annual revenue. For discovery research, there's over 7,000 high throughput sequencers worldwide, and this number is quickly growing as this field of technology is fastly being adopted. If they're able to sell 7,000 plus sequencers, they can generate up to 1.4 to 1.8 billion dollars in revenue, and then 0.5 billion to 1.1 billion dollars in recurring annual revenue. And right off the bat, I'm really liking these numbers, considering the market cap of Bionano Genomics is only 1.2 billion. So if their Sapphire system does actually see full adoption, they will be worth a lot more than they are right now. And there could be a very good chance of full adoption of this technology because Saphyr is actually able to detect multiple genetic diseases that other competitors cannot detect with their technology. And because of this, there has been several publications of Saphyr's success within the scientific community. The company also produces a lot of Bionano data, which is very important in the studying of multiple different genetic diseases such as ALS, leukemia, Alzheimer's disease, and multiple other diseases. Saphyr can also help detect variants in the host genomes of COVID-19 disease. And with Saphyr's help, they will be able to aid in the response, severity, progression, and drug response of the COVID-19 disease. Rescale, along with Amazon, Google, and Microsoft, are donating to actually help this cause. They have also recently acquired Lineagen, which will be a very, very strategic acquisition, as this company will help produce synergies with the company. And I'll tell you right now that this is a good acquisition. I like this acquisition. And although this acquisition has caused significant amount of expenses under the selling general administrative expenses on their income statement in 2020, going forward this will be less and less because the main expense going forward will just be paying the salaries of the employees that work for Lineagen. And from the date of the acquisition to December 31st, 2020, Lineagen has already produced $1.5 million in revenue for Bionano Genomics, and this is a huge and significant portion of their revenue. This acquisition will help provide the infrastructure, expertise, and data to get Saphyr adopted into the mainstream scientific community. Now, this will be very important because the revenue has not really increased in the past few years for Bionano Genomics, so they needed that push. They need that extra capital in order to be able to increase their company's revenue and increase the adoption of Saphyr. And part of the reason the revenue hasn't grown in the past year is due to COVID-19. Many of these labs that are using these machines, these genomic sequencing machines, are shut down currently. So once reopening happens, this company is expected to see higher revenues. Speculation of ARK Invest investing in Bionano Genomics, and they recently came out with a report where they mentioned that they were interested in investing in this company. This could be true, however, I'm wondering if they are concerned about the current valuation of this company since they have not invested yet, or if they're just completing more research before putting their capital into this company. Now, getting into the risk involved with buying this company has incurred significant losses in the past, and they have stated in their 10K filing that they do not know when they will become profitable and expect to not be profitable in the coming future. They also plan to invest any available capital they have into the expansion and adoption of the Saphyr system, which I think is a good thing because we want this company to grow to its full potential. Another risk is that they do not know how much capital they need in order to complete the commercialization of their Saphyr system, as well as continue their research and development efforts. Now, I believe they will be able to do this through significant stock offerings. However, there is an issue with stock offerings in that the investments that they make with the capital they raise have to outweigh the dilution that causes to shareholders in order for it to be worth it. So we need to have faith in the investments of this company, and basing it off their Lineagen investment, I think they will do a good job of investing. You can also take a quick look of their board of directors here, who are very established people in the business field, so I believe they will do a good job of raising capital and allocating that capital appropriately in their company. So another risk that they mentioned in their 10K filing is that if the company fails to achieve market acceptance, then the company will definitely be hurt. Their potential customers already have extensive equipment in their labs, and this equipment is not cheap by any means. So if they do not choose to adopt the Saphyr system and choose to go with their old genetic sequencing systems, then this company can definitely be affected negatively. However, this technology does do a substantial improvement on these other systems, so it's hard for me to imagine that their technology isn't going to be widely adopted. Now, this feeds into the next point of that their gene mapping systems need to be scientifically accepted throughout the world. The scientific and medical research community as a whole likes to see a consensus based off the scientific method that a technology is definitely better than a different technology. Currently, there are a few reports that do say that Saphyr system is in fact as beneficial as they say they are. However, there needs to be more adoption, more research, and more articles and more scientific papers that are published in order to actually get this scientific consensus. So they are not quite there yet in terms of that field. However, they will definitely be using additional capital to be pumped back into this and making sure that their Sapphire system gets the recognition it deserves. So they have also made the point in their 10K filing that their potential acquisitions may not result in a material impact on revenue of the company. Now, I'm going to be honest, based on their Lineagen acquisition, I don't think this is going to be a huge problem, considering they paid roughly $2.9 million in cash to close this deal, as well as $9.6 million in share. So out of pocket, they're only spending $2.9 million on this acquisition. The rest was just in shares that they raised additional capital for, and the Lineagen acquisition gave them an additional $1.5 million in revenue in 2020 alone. So that alone, they're already paying back the cash that they used almost, and $9.6 million of that was not out of pocket. So in my eyes, that was a phenomenal acquisition because it's going to help their mainstream adoption of their Sapphire system, as well as it did not cost them a substantial amount of money. So it's not going to be a huge hit to their balance sheet. Now going forward, we may see increased selling, general, and administrative expenses, as these have increased by roughly $10 million in 2020 alone. However, a lot of this is going towards marketing and basically promoting the widespread adoption of their technology, so they actually really do need to increase these expenses in order to obtain the scientific research that they need in order to become a huge player in this industry. Now, the last risk that I've briefly gone over already, but I'm going to talk about more in detail right now, is basically their equity issuance in order to raise additional capital for the company. So I've gone over this in many of my other videos, so make sure you check those out. However, when raising additional capital for the company, you are in part diluting shareholders. So let's say you own 25% of the company and you want to raise an extra like 20%, all right? So now you only own 20% of the company opposed to 25% of the company, but you paid the same amount. So your potential returns in the future are going to be spread out to more shareholders rather than to mostly to you. So when you're diluted, you're not going to be getting as many returns in the future. So when a company does do share dilution, the result of their dilution, so the capital that they use, needs to be towards a productive use that will generate higher returns than it would have otherwise. So it is important when a company does decide to dilute shareholders that this extra capital will be invested to generate enough returns to the point where if they never did the offering, they'd get a higher expected return, which can be a difficult task to do. Now, some people see this dilution as a bullish sign, and lately that has been the case for many companies. However, other people, and historically this has been seen as a very bearish sign when a company raises additional capital. It shows that they're not generating enough revenue to sustain their business. And I'm just going to say it's up to you guys to decide whether or not you see this as a bearish or bullish sign, because it really depends on what we see with the revenue and expenses going forward. However, I'm going to just say this right now. My recommendation is if this is something that worries you, wait for the volatility to go down, because this recent volatility that we've seen throughout the past few months has given them the opportunity to raise this additional capital. So if the volatility does go down, we're going to be way less likely to see share dilution. So if you're worried about share dilution whatsoever, definitely wait for the volatility to decrease. That being said, I really like their Lineagen acquisition, so I don't know if I even mind them raising additional capital, as they have done a good job with the previous acquisition. However, you just don't know going forward, so that's always a risk to take into consideration. And then the last risk I'm going to discuss is that basically their only product that they have right now is this Sapphire system. So I've discussed this before. You don't want to have all your eggs in one basket. You want to have multiple streams of revenue. However, I do think they are going to increase their multiple streams of revenue, and they have already with the Lineagen acquisition. So I don't think this is as big a concern as with other companies that only have one product, but this is still a risk, so I had to note it in the video. Alright, so now I'm going to do a price prediction on this stock. So currently I think this stock may be trading at a little bit of a premium. So its price to sales ratio is 175, which is not horrible. It's a lot better than Nano Dimensions in that video. I'll leave a link to that one. So that price to sales ratio was around 1600. So you want The lower the better, and most growing companies in this market are around a 20 price to sales ratio, which can show that this company is trading at a bit of a premium right now, but it's not the worst that I've seen. And we've also seen that on the year, this stock has been up 1,500%, which can also be a sign that we are trading at a premium for this stock, as nothing substantially has changed in terms of revenue for this company. Most of the reason that the stock has gone up is due to speculation that ARK Invest will invest in it. And just to show this to you guys, so their revenue has not really been increasing over the past few years. So they went from 6.8 million to 10 million to 12 million, back to 10 million, back to 8 million, and then their operating expenses have also been roughly the same. So this company didn't grow a substantial amount in order to justify an 1,000% increase in price, which can be a risk going forward. However, the market opportunity is actually pretty good for this company, so there still could be some upside long term based on the numbers that I've seen. So if you do want to invest in this company, just make sure you know that there may be some short-term volatility going forward considering the past of this stock, but now that it's seen some mainstream adoption, I don't think it's going to go down nearly to $1 a share or whatever it was trading at beforehand. I don't think that's going to be likely. Also, with this mainstream adoption, they're going to be able to grow a lot more than they could have without it. So there's definitely some potential value to that as well. So we're just going to take a quick look at the price to sales ratio and then compare it to other companies that are in the diagnostics and research industry. So as you can see, Bionano Genomics is not even at the top of this list for price to sales. And the higher the price to sales, it basically means the higher the premium you're paying. People use price to sales as a metric rather than PE for a growing company, because a growing company does not really have earnings at that point. They have revenue, so it's easier to base a price prediction based off the revenue than their earnings. So we have Bionano Genomics at 187 price to sales, and I can see right here Pacific Biosciences, which is their main competitor, is at 71 price to sales. And then we have Invitae right here, which is another one of Kathy Wood's picks. It's at around 23 price to sales, which is about the standard, I'd say, for this industry. And don't get me wrong, 20 price to sales is still a historically high value for a growing company, so just keep that in mind. So if we wanted to compare this to Pacific Biosciences, I did 187 divided by 71, which is basically both their price to sales ratio. And I'm going to use this to do a price prediction real quick. So we're going to do 7.61, which is the share price of Bionano Genomics. We're going to divide it by 2.63, and doing this will basically value its price based on Pacific Biosciences price to sales ratio, which would put Bionano Genomics at a price of $2.89 per share. So by putting Bionano Genomics at $2.89 per share, you can see right here that would be a huge decrease in their share price right now. So I'm not going to just say that it's going to go down to $2.89 per share, because markets don't always work out super fundamentally and rationally. People like this stock, people see its growth in the future, and we may see a substantial revenue growth in the future, which will also bring down their price to sales ratio, which without bringing down their stock price. So there's a bunch of factors that contribute to the stock price. So just using this one price prediction is not necessarily the best way to predict a price prediction, as it's not really factoring in the growth of the company. Looking at this from a technical perspective, it has turned into a downtrend with the 20 SMA crossing the 50 SMA, as you can see right here, and it also has a huge support around $7 a share, which it bounced off of yesterday and actually increased in price a lot yesterday. However, it could be going down in this channel right here. We just don't know. Its 200 SMA is at $3.13. So I did say $2.89, but I don't see it going much lower than $3.08 in the long term, just because this is a growing company, and typically growing companies bounce off their 200 SMA. So long term, I do think this stock has a lot of potential, especially factoring in the growth of this industry and what this company is doing. I think there's going to be substantial revenue growth going forward. However, in the short term, there is a lot of volatility in this stock due to a lot of retail speculation, so you just don't know where it's going to go. It could go up a lot from now in the short term, or it could go down a lot right now in the short term. And that's basically what you get with a volatile stock. As I showed you, it is trading at a premium compared to the price to sales multiple, comparing it to Pacific Biosciences, which is their main competitor. So I personally am not investing in the stock at these prices, but I'm definitely going to keep an eye on it because I do see the potential in this stock long term. So just be careful with your investments. You don't need to put money in right away. You don't need to FOMO into a stock. It is important to do research and come up with your own predictions before investing in a stock and make sure the valuation makes sense. Now, if you do believe in this stock, regardless, you might just think everything I said is just absolute garbage, and that's your opinion. However, I presented you with financial statistics and facts, and I used the company's investor presentation as well as their 10K filing in order to come up with the facts for this video. So I'm just presenting you guys what I found. I'm not trying to give you guys an opinion. I'm trying to base it off of financial analysis and facts. So that being said, I hope you guys enjoyed the video. This one was a long one. I did a lot of research. It took me a while to actually understand how exactly this genomic sequencing stuff works because I have no background in the field of science whatsoever, so it was actually a lot of fun to figure out this, and maybe I'll become a doctor. That being said, I'm not a financial advisor. I know this was a long video, so if you stuck around to the end of it, I appreciate that so much. So thank you guys for sticking around to the end of it. And that being said, I'm going to wrap up this video real quick. If you guys have not yet invested in the stock market, remember there's a link below to WeBull where you can deposit $100 and get 2 free shares of stock valued up to $1,600 a stock. It's essentially free money, so I recommend anyone does it who hasn't already done it. And that's going to be it for the video for you guys today. If you're still around, make sure you subscribe. Make sure you hit that like button. We do content like this almost every day. So yeah, make sure you stick around for that. That's going to be it for the video for you guys today. I hope you enjoyed. Peace!